traders and investors, and welcome to tonight's presentation. I want to do a quick audio visual confirmation, make sure that everybody can hear my voice. See the screen in front of you. We've got a lot to cover tonight, a lot. I want to go fast and furious. I want you to put your thinking caps on, take a lot of notes. I'm going to be sharing some workspaces, and very, very excited to be here. All right, looks like the audio visual are coming through good. That is awesome. It's good to know. Very, very happy to be here. I am in Florida right now. It's always a pleasure to be in Florida for the anniversary session. It's great to see students having a great time. But let's focus on tonight. Let's focus on what's going on right here. Focus on what's going on in the markets. First and foremost, need to make sure that everybody understands that there are risks involved and associated with trading and investing. Please understand that and be willing to accept those risks if you do trade. Also understand, I'm not a commodity traded advisor. What that means is, well, I'm not here to give you advice. I'm not here to trade for you. I'm here to teach and show. I'm here to guide. And that's about it. That's about it. I'm here to help you on this great journey. Now, I want to dive in. I want to get going. We've got a lot of trades to talk about. In fact, I've got 1, 2, 3, 4, 5, 6, 7 trades to talk about. 7 trades. Yeah, the pound New Zealand's been you know, working out fairly well. That's because the New Zealand inflation CPI report just came out, and it was the highest level. Inflation is starting to pick up. And I think it's going to be a theme worldwide, which means interest rates are going to start going up. And that's probably not a great thing for the worldwide economy, because the only reason why the worldwide economy really has been growing lately in the last, I don't know, 6, 7, 8 years is why? It's because of cheap money, right? You take away the cheap money. It's like the drunk guy at the party. You take away the punch bowl spiked with vodka, the party's over, right? Well, soon the punch bowl is going to be taken away from the market, and it's probably not going to be great. So, but let's talk about the dollar yen. Okay, so dollar yen, here's what we're going to do. We're going to go through these pairs first, and then we're going to answer 3 questions. All right, these are the 3 questions we're going to answer on these pairs. We're going to answer, number 1, what direction is the market most likely to move in next? That's the number 1 thing we've got to do. We have to answer that question before we place any trades. Now, some of you use targets, some of you use different things to be able to figure out which direction, and that's great. I'm going to show you the process that I use a lot of times. I am also a target trader. But I'm going to go through this process tonight that I use and I've used for years. Number 2, where is the market moving to? So once I know the direction it's going to move in, I've got to then say, hey, okay, we're moving up to this level. And then number 3, where am I wrong? Or I'll say, at what level will I be wrong? At what level am I wrong? Meaning, where do I place my stop? So let me just pause and ask for a second. Type in a Y or a yes in the question section if you agree these 3 questions right here are kind of the core questions we need to answer to place a trade. And we need a logical, systematic, step-by-step process on answering these questions to be able to place a trade. What direction is the market most likely to move in? Where is the market moving to in that direction? And where am I wrong, right? Because every once in a while I'm going to be wrong. And that's okay. It's part of this business. So let's think about these 3 questions as we go through all of these pairs. And we're going to go through all these pairs first. We're going to get the overall profitability we can expect. And then I'm going to show you the way going forward how I plan on taking these trades. So let's start here. This is going to be more of a position trade. I'm going to talk about the dollar yen first. This is going to be a dollar yen position trade. If I'm looking at this picture and I see this A, B, C, what is my expectation? First of all, let's answer the question, which direction do I have to believe the market is moving in? if I look at this wave sequence. I've got to believe that the market is the next move is up, right? I got to believe it's up. Now, this is a long-term chart. It's a monthly chart, but I got to believe it's up because, well, we know the market moves in waves, and it moves in A, B, C, D wave format. So our target on this trade should be up to 129.41. That should be our target. And there's a couple things that we can do to kind of build this case, right? So one, we've got this upward AB sequence with the retracement. Two, we've got a sub. And I'm sure you guys have heard the chief and many, many traders out there say one of the greatest trades you can take, or some of the greatest trades you can take, is sub ABCD sequences in a major or a longer term ABCD sequence. So A, B, C, well, let's trade this sub A, B, C to the extension. And the cool thing about this is, well, look at where this D extension of this A, B, C, D, look at where the D is in comparison to this A, B, C, D. Type in a wire yes if you see that. It's kind of a cluster. I call it a cluster level, or a level of confluence. It's an area that Fibonacci extensions are kind of clustering around. All right, well, it doesn't stop there. It doesn't stop there. It gets even more interesting. So this is, for the position trade, this is one of the only ones that I'm actually going to go into a shorter time frame for now into. But so we know, we've already answered our question, what direction the market's moving in. The market is moving up, right? The market is moving up, and we know the market is moving up. Or we don't know for a fact. We don't know anything for a fact. I don't even know for a fact I'm going to wake up tomorrow, right? I mean, I don't know. Who knows? Maybe you do. I don't. So I don't know anything for a fact. But what I do know is I know that based on the probabilities and based on technicals that the most likely next move is up. So, and then also if it's going to move up, type in a wire yes if you believe that the most likely move is, if it's up, to 129.41. Because that's the D extension. We also have a cluster level there, right? So it makes sense. Now, if I'm looking at this, where am I going to be wrong? I'm gonna go a little deeper. So I'm going to transfer this 129.41 over to this daily. All right. So we know we have to be a buyer, just based on this. And by the way, this is like the first time in a very long time that you've heard me basically say it's time to buy the dollar yen. Because I haven't been a buyer or bull on the dollar yen for quite some time. Sounds like you muted it. How's the sound? I'm getting a couple of you saying that the sound is very low. For some reason, I'm not sure why it would be low. I'm using a brand new headset. Okay. All right. I'm going to assume it's good. Pete, some of you are saying it's perfect. Okay. So now we know we're moving up. So we've got our direction. We know where we're moving up to. Now all I've got to do is I've got to find the level that I want us to stay above. And if it doesn't stay above this level, then I'm wrong. So once again, I want a lot of interaction in this webinar. Type in a wire yes in the question section. If we break below this A, this is the daily chart, that's probably a bad sign for the bulls, right? So it's pretty simple. As long as price can stay above this A, then we should have a bullish bias, and we should continue to think that we're moving up to 29.41. Now I want to show you something very, very cool, really interesting here. So this 29.41, if you remember, this is the monthly D extension. Watch this. Monthly D extension. So we've answered the first two questions. Where are we moving to? Which direction are we moving in, and where are we moving to? And then we've also answered the third question, which is where am I wrong? I'm going to be wrong if price goes below 101.18. Now, watch this. If price, let's say price turns right now, let's say price starts to rally right now, and it goes up to this D extension, right? Because it goes A, B, C, D, right? Well, if that happens, then what's going to take place is we'll put in our new A, B, C, D wave pattern that will look something like that. So now that I have that in, type in a Y or yes in the question section if you can see something very interesting about what is going to be potentially the new A, B, C, D wave movement once we hit this corresponding extension. Yeah, you see it? You see it? Look at where that extension is. So doesn't this picture give us a fairly decent idea that price is probably going to move something like this? It's probably going to start to rally up from this point. We're then going to retrace, and then we're going to start to extend up to this new daily extension, also hit the monthly D extension. That's what we're going to be doing. Yeah, it's confluence. It's also gorgeous looking crown. It's kind of an awkward looking crown, but there's a crowning formation happening right in there. We have a lot of reasons to believe we're going up to the monthly D extension up to 129.41. So now I've answered my questions. I've answered my most important questions, which is number one, which direction? We're going up. Number two, where are we moving to? Well, we're moving to 129.41. Maybe a little higher. I don't know, but that's where we're moving to. Where am I wrong? I'm going to be wrong if we go below 101.18. It's going to, so George says it's going to based on fundamentals also, in my opinion. Yeah, maybe, George. I mean, that's actually, it's ironic that you say that because that's actually one of the main reasons why I'm not necessarily like jumping for joy for this trade. Because fundamentally speaking, to really want to go long the dollar yen, now technically speaking, I see it. It's all right here, right? This is all right here. But fundamentally speaking, I want you guys to understand that I have a hard time, and I've had a hard time for a long time, buying anything against the yen. And the reason why is because I am a very big bear. I am a big-time bearish person on the world economy based on everything that's going on right now. I think we're living in a false economy. I think, and I think that history will show this. We will eventually go into a fairly aggressive another financial calamity, collapse, whatever it might be. I don't know what's going to trigger it, but it's going to be triggered by something. That concerns me buying the dollar yen because it's a risk-off currency, meaning the yen will strengthen pretty much 100% of the time when the economy, worldwide economies, start to slow down. So that's actually, fundamentally speaking, that actually concerns me. But the only reason why I'm actually kind of somewhat willing to buy this is because, well, technically, if I could go back a little further, and I could do this with the other data, if I could go back a little further, I would see that there's actually a major, longer-term major down AB that we're in that goes all the way back a while. So technically speaking, we have a little bit of a push higher that we could get. I think it's going to be followed by a big sell-off down when it's all said and done. But none of that matters. What matters right now is not what's going to happen in the next 12 months, the next 15 months, right? What matters right now is what's happening right here, right now, today. And so right here, right now, today, what do we need to do if we're looking to trade on a position trade, a longer term investment? What do we need to do with the dollar yen? You tell me. We need to buy. We need to start looking to buy. We're sitting at a low price in an upward AB. We have multiple reasons to believe we're going to start rallying up. Not only that, but we have multiple reasons. Fundamentally speaking, I agree with you, George, that the U.S., we're going to be in an interest rate rising environment. The fact that New Zealand just reported a CPI, consumer pricing index, at 1% tells me the world is going through inflation. And if the world is going through inflation, that's eventually going to come into the United States, right? And if we start to see more inflation in the U.S., then you mark my words, the Fed is going to continue to aggressively raise rates. And that will ultimately put a bid in a rally on the dollar, fundamentally speaking. So there's reasons to like this trade longer term. All right, so now that we have that, that's good. I'm going to leave it. I'm not going to leave it like this. I'm going to show you how I'm going to set up this trade. But for now, I'm just going to leave it like this. I'm a buyer up to 129.41 with a stop of 101.18. This trade here, if I were to just buy right now, this trade here has about 2,050 pips of profit. If I were to buy right now. Awesome, right? Pretty darn good. Pretty darn awesome. Okay. 36 minutes till takeoff. 200 pips in the Aussie down and the New Zealand bullish. George, what is going on in 36 minutes? Is there some big fundamental announcement that I'm missing? Okay. As George answers that, let's move on to the next. Pound yen. Pound yen. Now, this is more of a swing trade. It's more of a swing trade. And again, you can disagree with this analysis. You can disagree with what I'm about ready to show you. But I need you guys to understand that this has nothing to do with my opinion. If I was setting up trades just based on my opinion, there's no way that I'd be getting long the dollar yen right now. The only reason why I'm looking to potentially get long the dollar yen is because of technicals. That's the only reason. Fundamentally speaking, no thanks. With that said, I do like the fact that I can hedge my dollar yen position, my long dollar yen position, because of what I'm seeing in the pound yen. Now, if I'm looking at this picture here, what direction do I have to believe? What is the most, if we answer the questions, the first question is which direction is the market most likely to move in next? You tell me. I want everybody to answer. There is no wrong answers. Well, there is, but you know what? Hey, listen, that's how you learn, right? All right, A, B, C, and I know some of you are saying up because you're like, hey, it's going up because fundamentally speaking, Deutsche Bank just said they're going to cover all their pound, their pound shorts, and oh, now there's going to be a snap election, and oh, kumbaya land, and pound's going to go to the moon, and well, okay, well, maybe, but if I'm trading the technicals, then we have an A, B, we have a retracement potential for a C. Now we might go higher. The C might actually end up being a higher C, but for now we have a C and we're going down to our D extension. So I have to be a seller. Now there's also other reasons to believe we're going down. We've got this down AB with the retracement. We've got this sub down AB with the retracement. We have this sub down AB with a retracement. So we did a little bit of structural damage overnight. We had one additional down AB right here. So we had 5 down ABs. We had the major, we had this one, and then this one right here. I'll bold this out, this AB sequence right here. So we did a little tiny bit today. We did a tiny bit structural damage today, just ever so slight structural damage. Nothing big, but a little bit. And because of that, I've got to be aware of that. Now, it's not making me concerned. I'm not like saying, oh, no, what's going to happen? I'm scared. No, I'm not scared. I'm not concerned. But I do need to pay attention to this. And if I'm looking at this right here, which direction do I have to believe we're moving in? Which direction do I have to believe we're moving in? If I'm a technical trader, which I am, I have to believe, regardless of what happened in Great Britain, regardless of what Deutsche Bank is doing, Deutsche Bank doesn't pay my bills. Deutsche Bank doesn't send me a check and pay my bills every day. Not only that, but those brokers are a bunch of snaky, scam artists. Listen, half the time they tell you what they're doing the opposite. The reason why they're doing the opposite, if they say, hey, we're getting out of our shorts, you know why? Because they want you to buy it because they need somebody to buy it from and sell it to. They need to create some buyers so they can go out and sell more. So I'm not saying that that's going to happen, but let me just say this real fast. Let's say I have a real clunker of a car, right? I have a real clunker of a car, and it sucks. And I need to sell this car. What am I going to do before I sell the car? I'm going to shine up that piece of turd, and I'm going to, excuse my French, but I'm going to shine it up, and I'm going to make that thing look like the greatest car of all time, right? That's what I'm going to do. And then I'm going to sell it for the highest bidder. Not only that, but think about this. Let's say I'm a fund and I hold a bunch of, let's say I've been long something, or I've had a position. Let's say like in the stock market, this happens all the time. Let's say I hold a bunch of long, stock XYZ, and I'm getting concerned stock XYZ is starting to get to a level that's maybe it's had a nice run, and I'm like, oh, well, maybe I want to get out or whatever. I'm going to go on TV, I'm going to go on CNBC, and I'm going to be a talking head and all this, and I'm going to tell you how great my stock is. It's the most amazing stock. You know why? Because I need somebody to buy it from me. I got to create that demand so I can dump all my shares and give them to you, and I'm going to get out scot-free, and you're going to be holding the bag when this thing absolutely falls apart. If you don't believe me, it happens. If you don't believe it happens all of the time. It's just an ugly fact, and it's an ugly piece of this business that happens. I'm not saying that that's happening in the pound, but could it be happening in the pound? Could Deutsche Bank, could that be a smoke screen that Deutsche Bank is throwing up? I think maybe it could be. I don't know, maybe it could be. So, and not only that, but it doesn't matter whether I think it is a smoke screen or not. That doesn't make me money. What matters is technicals, right? So, technically speaking, type in a wire yes if you can see, yes, we do need to be a seller. We need to have more of a bearish bias than a bullish bias. It is just a fact. It's not something I'm making up. It is what it is. Okay. So looking at this, what level should I be fairly confident we're heading to? Well, I'm going to draw this out fast. This down A, B, C. We didn't go up to the 786. Is looking for a D extension down here. This down A, B, C is looking for a D extension right down here. That's that cluster area, right? Yeah, so that's ultimately where we should probably be looking to target. I actually think we're going to get lower than that. I actually think there's an argument that we're probably going to push even lower than that, probably down to this 33 level. But I think this level here at 35.12 is a good level to target. 35.12. I think that's a decent target level. Actually, you know what? I'm gonna target this 33.75 because of this down A, B, C. We got a 786. 33.75 is going to be on 33.75. And depending on how price responds, if it gets down to this 35 level and it starts to respond a little, jittery, and maybe it rallies up again, then I might take some profits. But for now, I'm going to say 33.75. And the main reason being, I'm going to get rid of all this because I don't want to confuse anybody, is because of this sub A, B, C looking for a D extension. Type in a wire yes in the question section if that makes sense. Yeah, so, okay. So where can I say, okay, so we know we need to sell. At what level can I say pretty confidently that I'm wrong? Well, I think fairly confidently if price is able to break above this level, I'd say this 42 level, but I actually think we're going to turn before that. So I'm going to be a little tighter on this. I'm going to place my stop a little tighter than I initially had. I'm going to say if price is able to break above 40.75, then I may need to reassess my outlook, because if price, now follow me on this, if price breaks above 40.75, then what is happening is this: A, B, C, D. Type in a wire yes, that makes sense. We break above 40.75. I believe that is going to break the back of the bears, and we're probably heading to 50.37. So I'm continuing to have a short bias, even though we hit this 382 retracement, which is great. I've been looking for that. That was a good trade. I want to continue my short bias. There's going to be another opportunity. If we can stay below this 40.75 level, then I think the next move is going to be down to 33.75. So that's really good, right? It gives us some great profit potential. We can manage our risk. This is going to be a good trade. If we break above 40.75, I'm probably going to be sitting on my hands. But if I'm sitting, if the pound yen breaks above 40.75 and I'm sitting on my hands, am I making money in something else? Remember the first trade we talked about the dollar yen, right? I'm getting long the dollar yen. So if that breaks above that, okay, now I'm sitting on my hands, but I'm making money in the dollar yen then. You guys see how I'll play that? So if I am wrong in the pound yen, okay, that's fine. I'll make money in the dollar yen. That's all right. Okay, so here's the trade though. Right now, none of that matters. I can't assume that we're going to break that A. I can't assume that that's going to happen. What I can see is I can see that we have reasons to be a seller because of this down AB, this down AB, this down AB. If we stay below 40.75, I need to trade to the downside, and my target is down to 33.75. So from current price, my profit potential on this trade is right around 540 pips of profit, plus 540 pips profit. I like it. Okay, so we'll come back to this in a second, and I'm going to show you the formula I'm going to use to get into this, and the formula I'm going to recommend you guys using to get into this. That's absolutely brilliant. But before I move on, does this make sense? Type in a Y or yes in the question section if this makes sense and you understand why I like this trade a whole lot. All right, perfect. And again, I like it considering the fact that I'm looking to go long the dollar yen. That makes me like it even more. Because if I lose on this one, I'll win on the dollar yen. If I make money on this one, I might lose a little bit on the dollar yen. Overall, I should be able to hedge these and probably make money regardless of what happens. And I love trading. I love trading in that way. I love trading with hedges in different areas on correlated currency pairs, which is, we should probably build a whole class around that, but that's for another day. Anyway, all right, let's move on to the Euro CAD. Dana says, I bet it goes up. Dana, if it goes up, then you know what? Based on correlation, I'll bet the dollar yen goes up too, and I'm going to make money. Because remember, my risk in the pound yen is 180 pips, while my reward in the dollar yen is thousands and thousands of pips. So if it goes up, I make money on the dollar yen, I lose on the pound yen. Overall, I should make money. All right. So yeah, thanks. Okay. Euro CAD. Euro CAD. Based on this, I'm going to just draw this out here, and we'll just kind of map this together. All right, which direction? Let's answer the three questions. Which direction are we going to be trading in, or should we trade in? Where is it going to trade to, and where are we potentially wrong? So we got to be thinking down to 39.13 is my first level that I believe we're going to get to. 39.13, whoops. We could go much lower than that, but I want to keep this a little conservative. These are more swing trades. So 39.13, that's the D extension right down here. Well, also that's an area of prior support. So there's reasons to believe if we start to sell off, we'll probably go to that support level. We got this down AB. So where am I going to be potentially wrong? If price is able to break above this A right here, then what is happening is this upward AB that's going to be formed here in the next day or two right here is now taking control, and that means we're going to go deeper. We're going to have a deeper C of this AB down. So let me say that one more time. If price breaks above 45 or 46, it means we're going to have a deeper C of this AB down, and I'll have to look to short higher. But for now, I can't assume it's going to break above this A, right? I just can't. I mean, I can't make the assumption. I have to trade what is. My assumption is that this A is going to hold, and we're going to push down to this prior area of support, which is also a D extension. So this trade here from current levels offers me about 530 pips of profit. All right, before I move on, type in a Y or yes in the question section if you understand at least a little bit why I like this trade to the short side down to 139.13. All right, perfect. Okay, All right, next, Aussie CAD. Now, this is one that I want you to be careful on. There's actually an argument to be made. We could see a little bit of a push higher, and I'll go into details in a little bit here. But if I'm looking at this, which direction do I have to believe we're moving in? I have to believe we're moving down. I have to believe we're moving down. Now, I actually think we're going to get a deeper C retracement. So I believe that we're actually going to get a deeper C retracement of this A, B, C, D, because I believe it's going to be imperative for the bulls to have this A down here at 98.48 hold, which means that the extension on this point is going to be down. Our target needs to be down at about 98.65. That needs to be our target, 98.65. So this trade right now isn't perfect. Yeah, that's a nice looking crown. It's a very nice looking crown. And actually that's one of the reasons I believe we're going to get a deeper C is because of the 8.6 extension or retracement followed by the 118 extension, and that will still keep intact this upward AB. So we won't do any structural damage to that, which is good. But for now, let's answer the three questions. Which direction are we trading in, up or down? Now, we're not answering whether we should get in right now or not. We're just asking which direction. Down, right? I've got to trade down. Doesn't mean that's a great time to short right now. But if we do look to short, we're going to short down to 98.65, and my stop is going to be, my I'm wrong level is going to be at 102.55. So this trade here from current levels has approximately 240 pips worth of profit potential. $240 pips profit. Yeah, 240 pips. Okay. Next, so we've got, and I'm going to recap these. We've got the pound yen. We're looking for 554 pips. We've got the euro CAD. We're looking for 530 pips. We got the Aussie CAD. We're looking for 240 pips. Let's go pound CAD. Okay. With this picture right here, which direction do I need to start looking to trade in? This right here is my favorite pattern. Yeah, short. The area that I don't want price to move above is this A right here. My target, my conservative first target is going to be down to this 382, which is down to 68.71. That's going to be my first target. I think we could push lower than that, but I don't want to get too aggressive with this, but I do believe that that is where we could see a push to. I believe that that's where we could see a push to. If we go above 75.90, I'm wrong, but we need to look on the short side with a target of 68.71. Type in a wire yes in the question section if that makes sense. So from current price, this, we're thinking down, has approximately 350 pips worth of profit potential. 350 pips profit. For some of you that are saying no, are you saying no because you're letting the perception of what Theresa May said and perception of what you think is going to happen in the pound get in your way? I just have to say this. You cannot trade off of perception. If you want to lose money in this business, trade off of what you think. I'm just saying this from experience, right? I'm just telling you from experience. Every single time I've lost a huge amount of money, it's been because I've traded off of my opinions and off of what I think, not based on what is actually happening. What is actually factual is this. This is a fact. It isn't a down AB. This is a fact. This is an up AB. It is a fact. We are at a high price. It is a fact that we have an 80% probability of this retracing to the 382 because we know the 80-20 rule. Those are the facts. Everything else is just is opinions. I'm telling you, I can create 10 different reasons why what Theresa May did yesterday is super bullish for the pound. I can create 10 other reasons why it's super bearish for the pound. You and I could argue until we're blue in the face, but the reality is you and I can't argue about this because it's what actually happened with price actions. It's truth. Price is truth. Type in a wire, yes, if that makes sense. So I'm not here to beat up on you guys. I'm just here to tell you I am probably the greatest at one thing. And to say I'm the greatest at anything is a little cocky and conceited and arrogant. But here's the one thing that I think I might be the greatest in the world at. I am the greatest in the world at losing a ton of money by trading off of my feelings. Because I'm a pretty opinionated dude, and Lord knows I can lose a lot of money if I trade off of what I think and what I feel and my perception is what should be. I would put my skills of losing money against yours if we're going to trade off of our emotions. That's the reason why I don't do it. I just got to trade what is. Okay. So this trade here, I'm looking for 350 pips to the downside. And I'm going to continue to look to the downside until we break this A. If we break this A, then I'm wrong. You know, I'm wrong if we break this A. So, but, you know, for now, I know probabilities and I trust the technicals and I trust the market. And for now, I got to look to the short side. Okay, next trade, pound New Zealand. All right, which direction do we have to believe we're moving in the pound New Zealand? Well, for now, we have to believe we're moving down. Now, again, you know, there might be a lot of reasons why some of you think we could build a bullish case. You know, I get it. I'm not going to argue that you're wrong because you could be right. But really, until we break that downward A right here, I can't be a real aggressive buyer until we break that A. Not only that, but this is how many of you have been with MTI for a year and a half or longer? Type it in me. Okay, Gerald has, Cheryl, Dick, Michelle, Richard, me. Okay, then I almost guarantee you've heard me talk about my favorite pattern that exists in the entire market is this pattern right here. Down AB or up, doesn't matter if it's down or up, down AB, retracement in, minor up AB without a retracement. This is a pattern that if I did nothing else for the rest of my trading career, if all I did was trade this pattern, I would be set if this is the only pattern I traded. And a lot of you have heard this. Type in a Y or yes if you've heard me talk about this type of pattern right here, right now. I love it. And does it work every time? No, it doesn't work every time, but it's a pretty darn good pattern. Pretty high success rate if you've been kind of tracking some of this. It does work. It does work not all the time. It works a lot. It's probably about 80% probability, which makes a lot of sense because the 80% probability is just based on the retracement, right? This is, I call it a 3-2 pattern. So it's, I'll explain this. I'm not going to explain the scoring process because that's really irrelevant at this time. Well, so we've got an A, B, C, major A, B, C. So A, B, C. Within that major A, B, C, we have a minor up A, B. But what we don't have here is we don't have a defined C retracement until price can put in at least a 382. There is no C because we know the probability says that we have an 80% chance of going down. So, and this is a perfect example. What happens to price a lot is you'll see, and you'll continue to see this happens a lot. You'll get an A-B sequence higher, a weak attempt to retrace. It will then start to break and close above the B, and if that happens, it's going up with a very high degree of certainty. It's going up to between the 118 and the 127. Did anybody make money off of that trade? I talked about this trade last week. I said if we break and close above the B, we're going up here, and that's exactly what happened. But then after we get up to between the 118 and the 127, that's when we look for the great reversal pattern that will take us down to the 382 to create this true C. So hopefully that makes sense. Type in a wire yes if that makes sense. So that is, there's two really brilliant trades in this pattern. There's kind of a counter trend, more aggressive trade where you could trade up to the 118, 127, and then there's a trade happening right now where you short down to the 382. It's my favorite pattern. Okay, so let me get rid of this. So we've got to look to sell. We know that. And from current price, we have about 650 pips worth of profit potential. So plus 650 pips of profit potential. I'll just say profit. Okay. Now, the one thing I don't necessarily like about this trade, now I do like this trade a lot. It's one of my favorites. The thing I don't necessarily love about it is the fact that to be safe, the safest place to place our we're wrong level or our stop, to put it another way, is above this A. And if we do place our stop above that, it makes the risk to reward not all that great, right? It makes our risk to reward kind of like, it's not great. But, well, let me just see, yeah. But that's really, really the best place to put it. So, but I'll show you how I'm going to manage this. All I want to do is, so I'm wrong if we get above 90.42. I believe we're going to 75.13, and we have about 650 pips of profit potential to the downside. Type in a wire yes if that makes sense. Now, it might not be a trade that meets your requirements because the stop is too wide, and I get it. I'll show you how I plan on getting into it. That's the one thing I don't like about it, but I still like the trade a lot. Okay. All right, short-term pound yen. Now, I am not a short-term trader, but I'm going to just show you this as an example. This, once again, this should look familiar. Can you guys see the 3-1 pattern? Down AB, retracement in. Minor up AB, weak attempt to retrace. No 382 retracement. Breaks above the B, goes to the 118, 127, reversal pattern. It's, mark my words, we are heading down to 37.81 at least. We're actually going to head lower than that, but 37.81 is where we're heading at least. And in fact, on this trade, I'm going to have a target. We retraced this AB pretty close to the 8.6. So my target on this, I believe we're actually going to go deeper than this 382. So my target's actually going to be down to this extension, down here to 36. This is a short-term trade, 36.39. Okay, so based on this short term, type in a wire yes in the question section if you can see why I would believe, based on the short-term 1-hour chart, why I believe we're heading down to 36.39. Down AB, retracement in. Up AB without our retracement. That gives us reasons. Plus, we have a bear crown kind of forming right now. We're sitting at a relatively high price. Okay, at what level am I going to be wrong? I think this is pretty clear. The level that I'm going to be wrong at is if we are forming what looks to be the potential for a crown right here, and we might get a deeper retracement, but if we're forming this crown, then I am absolutely wrong on this trade if we break above the crown high. So my stop on this, or my I'm wrong level on this, would be right about here on a short-term trade. So on a short-term trade, I want to short with profit potential of about 270 pips, and I'll be wrong on this short-term trade if price breaks above 40.18. So profit of 270 pips of profit. All right, type in a wire yes in the question section if that makes sense on a short-term trade. Okay. All right, so we went through all of these. We've answered the question of which direction they're going in, where's it going to, and where am I wrong? Those are the 3 core questions we need to ask ourselves before we place any trade. Now, how are we going to get into this? Well, Joshua Martinez yesterday launched a product that I believe is a absolute must-have. If you believe, I'm going to just ask a question. If you believe this, if you believe that to be a professional trader, you need to know the direction, have a logical explanation and reason to trade in a direction. You need to have an area and a level we believe we're going to, and an area and a level you believe if we go to that level, you're wrong and just take a stop. And you also believe that you need to put reward in your favor in comparison to risk. So direction, a good entry, a logical good entry, and manage risk. If you believe those are the things that you need to follow, then I believe what I'm about to show you with the grid is an essential. But don't just take my word for it. I'll explain why. I'll explain why I believe this. Yeah, absolutely, Helen. For sure you can. There's no question about that. I think you prove it all the time. I think you already are. Right? So Helen says I can be a professional trader without it. I agree. Listen, I agree. Now I'm gonna show you one of the reasons why I believe you're gonna be more of a professional trader, a better trader with it. Now let's just go through this. Okay, let's talk about the grid for a second. Type it in me if you've heard about the grid trading. And I'm going to go through each one of these and show you exactly how I'm going to enter these. Okay? All right. Let me explain this. So let's just say that you're a trader and you get into a trade that looks like this, right? Price just broke above like a key level. It's now you've got an A-B sequence that looks like that. We're sitting with a retracement. You then, and I'm going to just use hypothetical totals here. You then decide that you're going to pull in a counter trend line, and you go long on this counter trend line right here. Does this look like a pretty typical trade? Your target would be up here, and your stop would be down here, right? This looks like a pretty typical trade, right? A-B sequence, you're buying at a low price, you're waiting for a counter trend line break, you're now target. Okay. So on this trade, let's say that trader one, so trader one takes the trade and has 250 pips of profit potential up to the D. They take the trade. That's trader one. Trader two uses a grid. Trader two says, well, what I'm going to do is I'm going to buy at the same place that trader one did, but I'm going to use a grid that let's say is 50 pips or let's say is 25 pips wide. So every 25 pips, they decide to the upside and downside, let's say 5 to the downside, so 1, 2, 3, we'll say, let me do that again. 1, now this isn't going to be pretty, but I'm going to 2, actually let me do it this way. This will make more sense. All right, you buy at the same level right here. 1, 2, 3, 4, 5, right? And this grid trader says, you know what, if price, I'm going to get in the same level trader one did, but if price falls, I'm going to add to my position down here. My stop is going to be the same level. We both have the same stop. Trader one has a stop down here, and I have a stop down here. We both have the same stop, okay? And we both have the same target. But trader two says, okay, well, I'm going to grid in, and I'm going to buy if it goes against me, but I'm also going to buy if it goes for me, and I'm going to buy up to 5 levels if it goes for me, right? So 1, 2, 3, 4, 5 if it goes for me. Well, trader one, let's say price rallies up and hits the target, right? That's great. Trader one made 250 pips. What did trader two make? Trader two made 250 pips on the first entry. If these are each 25 pips apart, He made 225 pips on the second entry. So let's add this up. So the first entry, he made 250 pips. Second entry, 225. Third entry, 200. So 250, 225, 200, 175, 150, and last entry would have been 125. Trader number 2, if this thing just rallies up, makes a total of, so trader number 2 makes a total of 1,125 pips. The same exact trade. Now, here's the beautiful thing. What if it starts to rally up, but it doesn't go in a straight line and it goes kind of in a wave sequence, right? And it waves higher. And what if trader number 2 has the same target but resets the grid every time he gets 250 pips of profit potential? Well, by the time price gets up to this level right here, he's already got about 250 pips because he's got 25, 50, he's got 75 pips here. He's got 50 pips here and 25 pips there. So he's got 175 pips, so it'd have to go up a little bit higher. So right around in this level right here, he would already have 250 pips. He'd be able to close the trade and reset the grid. Type in a wire yes if you understand what I'm saying. So he'd book 250 pips there. Only halfway to your target. Only halfway to your target. Then let's say price then comes down, and because, you know, price doesn't just automatically go up, it then comes down. And trader number 1's losing some money, and trader number 2 continues to buy, and then finally it starts to rally back up. Starts to rally back up like we thought it was going to. And now trader number 2 made 250 pips here, and now is in all these, and by the time it rallies back up and you dollar cost average all these, he books another 250 pips right here. Huh. But he's not done. Right? He continues to buy. And let's say he continues to do this and it goes like this, and all of a sudden price, and this happens a lot, does this. And then rallies up. And what did this just form? And how many times have you seen price do this within an A-B sequence? It just forms a crown right there. This happens all the time. And so trader number 2 made 250 here, 250 here, and then kept buying. Bought here, wasn't up quite 250, bought here, then bought here, made another 250 right about in here. Then it keeps rallying, buys here, and overall ends up with a profit. So made 250, and then from this point ended up making another probably 100. Overall ends up, in this scenario, ends up making probably 3 to 4 times trader number 1, and they set up the same exact trade with the same exact target, but trader number 2 used a grid instead of just used a static target and a static stop loss. Type in a wire yes if you understand what I'm saying. Trader 2, by using the grid, literally tripled, maybe quadrupled his profits, his or her profits, simply by using the grid. It's the same trade. We're looking for the same level. We have the same exact stop. We're just managing the trade in a different way. Now, before I show you how I'm going to manage the trades that I just set up, before I show you this, I want to explain that Josh has developed a formula, okay? This formula works, is brilliant. Don't ask me how he developed it, because honestly, I don't know. Sometimes I think, this has happened to me too. I know Josh is a man of faith. I think sometimes it's like divine intervention or something. I don't know. But this formula, I want you to see this. What he does is this. It's a 6-step formula. I'm going to go through this kind of quick. The first thing that we do is we make sure we're on, and this works on any time frame. Okay. First thing you do is you make sure you're on a time frame, whatever time frame you're on. You're bringing in 500 bars. You don't need to bring in more than 500 bars with this formula. And what he does, he shows this a lot on the 1 hour. 500 bars on a 1 hour chart represents about 1 week's of price action. This is about 1 week, okay? And then, so once you have 500 bars, you measure the distance between the high price and the low price of those 500 bars. So we have about 300. I'm going to round that to 340, okay? So about 340 pips. That's the distance. So that's the second. Then I take 340 times 3, all right? That's the third. Then I take that number, so I took 340 times 3, then I divide that by 2, and then divide that by 10. That gets me my number that I need to use with my grid. So my grid needs to be 51 pips wide. The reason it needs to be 51 pips is because I took the overall distance using 500 pips, times that by 3, divided by 2, divided by 10, it gets me 51. Time to wire, yes, if that makes sense. It's the same formula on whatever time frame you use, and I'm going to show you this multiple times. Okay, so 51 pips. Now watch this. This formula here, using the matrix. So I'm going to do 10 grids up, 10 grids down, 51 pips wide. And using it, Josh calls this the no-brainer formula. You don't even need to know direction. You don't need to know anything about the markets. You just put the grid on. And I get the question, well, Tyson, what if you pick the wrong direction? Well, watch this. If I put this on and I have a 51, using the formula, and I have a 51 pip grid, and I close every trade when it has a 51 pip profit overall, watch this. Oh, I needed to do both sides. Give me a second here. I need to do, clicked on one wrong thing. Give me a second. I apologize. I've done that like 4 times today. Okay. Okay, let me do that again. So right click. So I'm just using the static, I know nothing about the market type of approach. So I'm going 51 pip grid. I'm going to do both sides, above and below. I just set it up as a buy, but I'm going to show you how it doesn't really matter. And I'm going to do I'm going to take profits at 51 pips, okay? 51 pips. So I'm going to trade both sides. For this example, I'm going to say we're going to buy. The grids are going to be 51 pips wide, and I'm going to do 51 pip target. So now I'm going to hit OK. Okay, so now you see the grid sitting in there. I don't have to do anything else. They were automatically put there. So what if you would have traded this style for the last week? How much would you have made if you would have been buying? Well, let's do the math. You would have bought here and bought here. Because, right, you're buying, so you would have bought here, and by the time this rallied up, this trade's up 51 pips, this trade's break even, so therefore you're up 51 pips right there. Okay, so now you buy here once again because you don't know anything about the markets, right? We're just saying you know nothing. You buy here and you make 51 pips right there. Okay, then you buy again here, up, then you buy here, and you buy here, and you buy here, and you buy here, and you buy here. And then you're finally back up here, back up there. So what are you down on this trade? Well, this trade here, you're up 100 plus pips on this trade. You're up 50 plus pips. You're break even here. So overall right here, you are up 51.51. You're down on this one about 100 or so. You're down on this one about 50, but overall, your break even or your profit potential on this, if it continues to rally because you've dollar cost averaged into this, your 51 pip target when this rallies up to about 107.80 will be hit, and that will once again be another profit. So you made 51 pips here, 51 here. You then cost average, so you got back in after you made that. You're now in this, and now you're looking to get out of the position when you get up to 80. Now, what if you would have taken the short side? Because this works regardless of the direction that you traded. If you would have taken the short side, these same grids would hold true. But how would you have done then? Well, you would have shorted here and made 51 pips. You would have then shorted here and shorted here and shorted here and made 51 pips right about there. And then shorted here, another 51 pips. Shorted here, 51 pips. Shorted here, 51 pips. Shorted here, shorted here, shorted here. Your break even on the short side is down to right around this level right here. So whether you went long or you went short, the long is up right around 25, 30 pips. That's not a lot because it's been more of a downtrending market, but you're still up. And the short, you're up 1, 2, 3, 4, 5. about 6 times you've hit a 51 pip target, and you don't need to know anything about the markets. You just set it and forget it. But that's not the way I'm going to trade it, guys. That's not the way I'm going to trade it. I'm not going to trade it like that. Because I'm a professional trader. You guys are professional traders, right? So I don't want you to have to trade it the no-brainer way. What I'd rather you do is be the professional trader you are. We should be able to answer the question, whether you're a target trader, leveling student, whether you're a mastermind student, or whatever type of student you are. Type in a wire yes in the question section if you should be able to answer the question of which direction the market's moving in and where should it move to. If you can answer those 2 questions, those are the most important 2 questions. Which direction and where to. Target traders, you have it easy. If you're a target trader, this is a must-have because target traders, you know which direction to the missed target, to the on-hit target. And where to? Well, to the on-hit target. It's very easy. So here's how I'm going to trade this. I'm going to go into the short-term trade first. So in the pound yen, I know we are moving down to 136, or I'm confident, we don't know anything for sure, right? But I'm confident we're moving down to 136.39. I'm confident now. So now what I'm going to do is I'm going to go to, this is the scalping method. Now I'm not a scalper, but if I were, this is how I would do it. I'm going to now go into a very short-term chart, a 5-minute chart. Now I'm not going to the 5-minute chart to trade off of the 5-minute chart. I need you to understand that. I'm not setting up my trade based on the 5-minute chart. I'm setting up my trade based on the 1-hour chart, which I actually do. The 5-minute chart is serving the purpose of the formula. I need everybody, please type a wire yes in the question section if you understand that. The 5-minute chart, the only purpose of the 5-minute chart is to set the formula up. It's not to actually trade off of, okay? I'm not actually like making my decision off of the 5-minute chart. It has nothing to, 5-minute chart holds no weight on my decision on the direction and levels. It's the 1 hour. We're heading down to 36.39. My stop is going to be at 40.18. So now that I know that, now I need to set up my grid. Now watch this. What's the formula? I take the high to the low. This is, first of all, let's see it. Do I have 50 or 500 bars? Yep. 500 5-minute bars. This works on every time frame. I measure that. It's about 400 pips. It's a little over 400, but I'll say 400 times 3 divided by 2 divided by 10. The grid needs to be 60 pips wide. So watch this. This is brilliant. I'm going to say I'm going to both sell when we get higher and sell when we get lower. I want to do both sides, above and below. I want to sell my target and my stop. My stop is going to be at 140.19. My target's going to be at 136.39. And now, in the count of 3, I'm done. 1, 2, 3. Oh, did I say 1? Why in the world do I keep doing that? Give me 1 second again. I apologize. I have to double check. Don't let me hit OK until I double check. Somebody type in Tyson, double check. Oh, okay. Let's do that again. All right, 60 pips, right? So first of all, let's do this. For short-term traders, why do we think we're heading down? Well, because the 60-minute down AB, we believe we're going down to 36.39 because that's the extension. If we get above here, we want to take a stop. Okay, so now let's set up the grid. We have 10, I want 10 entries, 60 pips wide. I want to trade on both sides. I want to sell. My stop is going to be at 140.19. My target is going to be at 136.39. Done. Check that out, guys. Thank you, Alan. Alan just typed in right before I hit OK. Typed in double check. Okay, type in a wire yes in the question section if you can see these grids. What does this mean? Guys, listen to me when I say this. What this means is if you're a short-term trader, if you're a short-term trader, and let's say you like this trade, you agree, you're like, this is a great trade. A short-term normal trader would have 270 pips of profit potential. And you say, oh, well, I'm going to make 270 pips. A grid trader takes the exact same trade, but grid trades. Doesn't have to set this up manually one by one. Grid trades this all the way down. So it makes 260 pips on this entry, another 200 pips on this entry, another 140 pips on this entry. So let's do the math. 260 on the first entry, 200 on the second entry, 140 on the third entry, 80 on the fourth entry, and 30 on the fifth entry. 710 pips in comparison to this trader is going to make 270 pips. That's if the market just goes in our direction right away. What if the market doesn't go in our direction? Well, it can get even better because price will go up, your dollar cost, you'll leverage into the trade, and then it goes for you. You'll actually make even more, maybe like 900 to 1,000 pips. Type in a wire yes in the question section if you understand what I'm saying. The same trade, but one trader is going to make 270 pips. The other trader is going to make over 700 pips just by setting up the grid. And one of the most beautiful things about this is it's going to save you time. My job's done now. My job's done. And Anthony asks a good question. Says, well, don't you have to hold all of those trades? Yes and no. If you decide to, yes. But remember how I said if I wanted to set this grid up with an overall target down here, and I could say close the grid and reestablish the grid once 270 pips is established. So check this out. If price then right now falls like this, let's say it falls like this. Well, on this first trade, I'd be up. On this first trade, well, let's say it goes like this. It falls down here. On this first trade, I'd be up. What is that? That'd be 180 pips because it's 60 pips wide, so that'd be 180 pips. And the second trade, I'd be up to 120 pips, so that's 300 pips. So I would have closed this trade right about here. I would have my trading this style. I would have my 270 pips already in place. Type in a wire yes if that makes sense. Because I got short here, here, and here. When those all add up to 275 pips, I could set it to close it, or 70 pips, I could set it to close it. Then, let's say it reestablishes the grid. Now, let's say price does this. At that point, I would probably have another 270 pips, and it'd close it one more time. And then, let's say it continues to wave, and it finally goes down to my target. So regardless of how I set it up, with dropping every 270 pips or just trading it all the way down, my expectations of this just by trading the grid, and here's kind of the bottom line with this. Every single trade you take from this point forward, if you trade it with the grid, you should double, triple, maybe even quadruple your expectations of pips that you're going to make just by trading with the grid. If you let the grid do what it's going to do. This one example right here, instead of making 270 pips with the same trade, this one example, I believe traders should be able to make probably right around between 700 and 1,000 pips. Type in a wire yes in the question section if you think that's pretty darn cool. And I'm going to show you these examples, and I'm going to set all this up. I'm going to show you how fast this is. It's so amazing. It's amazing because it's going to save me time. I love saving myself time. I don't trade in a grid style like this, not because I don't like it. I don't trade in a grid style like this just because it's too time consuming. I love this style, but I don't trade in this style. All right, so position trade. Let's start out here. Okay, so let's do the formula. So we know, or I'm confident we're moving higher, and I'm confident we're moving higher to 29.41. So I've got 500 days of bars here, so I'm going to do the same thing. That's 2,560 pips range, so 2,560 times 3 divided by 2 divided by 10. So I need a grid of, this is for position, I need a grid of 385 pips. I'm going to round that to 385 pips. So I'm going to go matrix, 10 grids, 385 pips. On both sides of the market, I'm going to buy. I'm going to set a stop of 101.18. And again, this is a swing trade or a position trade. This is a longer term trade. Target of 129.41. I'm going to double check. Thank you guys for reminding me. Done. My job's done. So now this trade, think about this. If this trade starts to rally up, I have a decision. I can make 2,500 or 2,000 pips just by buying it right now, or I can make probably, I don't know, another 1,500 right here. That's probably 3,500, another 1,000, that's probably 4,500. Let's say another 750, that's probably 5,200, probably close to 6,000 or 7,000 pips. Instead of making 2,000 pips on the same exact trade, I'm going to probably triple my profit potential in this trade. Type in a wire, yes, again, if you understand what I'm saying. And if I wanted to, I could set this up. I could say, well, I have a 2,000 pip target. So as this grids up and as this waves higher, every time it gets 2,000 pips in profit, then let's book the trade and let's reestablish the grid. That's another, and Josh is going to teach all this in the course. That's another phenomenal way to do it. All right. So that's my long-term trade. That's done. We got our short-term trade, pound trade. That's done. Let's go to our and I wouldn't do both of these. This is actually the one that I do. Let's do our swing trade in the pound. All right, the swing trade in the pound is this. Let me do this. Okay. Give me a second. Okay, there we go. All right, so now let's do the swing trade. So remember, we believe, what do we believe on the swing trade? We believe that the pound is moving down, and we want to short down to 33.75, and we're willing to continue to short until or unless price can get above 40.75, right? Remember that? So now what I'm going to do is I'm going to use the formula. I'm going to take the high price and the low price, so over the last 500 hourly bars, that's 460 pips. So what I'm going to do is I'm going to take 460 times 3 divided by 2 divided by 10 gives me 69 pip grid. So now I'm going to set my grid up. I'm going to set my grid up. Oops. I'm going to have to give me one more second here. I'll be right back. I'm going to set my grid up to be 61 pips wide, or I'm sorry, 69 pips wide. And I'm going to short. And these are the levels I'm shorting down to, and my stop's going to be there. So let's set this up. I'm going to go matrix. I'm going to say both above and below. I'm going to do both sides. I'm going to sell my target and my stop loss. My stop is 140.75. My target is 133.75. Double check. Everything looks good. Hit OK. Oh, man. Did I not do that right? What in the world, Tyson? Oh, geez, sometimes I frustrate myself so bad. And Lewis typed in double check. Well, now that you see me not double checking, you guys will never not double check, right? I guess I need to like quadruple check. The only way I'm not going to make mistakes is quadruple check. Good Lord. Okay. All right, let's do this again. Let's do this again. If I mess this one up, I'm hanging it up, I'm calling it quits, and I'm going home. All right, we're going to sell. We're going to do both sides. I got 10 levels. Oh, what? That's why. 69 pip grid. 69 pip grid. My stop and my target. My stop is 140.75. My target is 133.75. Let's double check. 10 grids, 69 pips wide, both sides, sell, stop, target. Everything's good. Bingo. Done. Pretty darn sweet, huh? Okay, here's the deal. I have not talked to, on purpose, I have not talked to anybody from management on the back end, on the client side of this business. And the reason why I haven't is because I did a webinar at about 4 o'clock, and we had about 20 available spots for people to get into this and receive this for life. Now, I am pretty sure, almost guaranteed sure, that we don't have 20. In fact, I'm almost positive that those 20 are gone. But I'm going to, Jerry, I'm going to ask for forgiveness rather than for permission, because I'm kind of notorious for doing that. And someday it's probably going to bite me in the butt, but I'm going to do it anyway. So I have been told that we will not go over 100 students that get this for life. After the first 100 students are in, it's then you can sign up, you will get it for 3 months, and then it will go to a monthly subscription. That sounds okay, but you know what? I don't want you guys to have to do that, so I'm probably going to get in trouble for this, but I have literally avoided, and I'm in the same office as Jeff and the back end guys and all that. I've avoided them for the last hour and a half because I'm going to assume there's still, I don't know how many, I'm going to just say 20 available spots. And if there's not, and your education specialist gives you crap about it, says, no, they're gone, then you know what? I'll have to subsidize the cost or something. I'll have to like cover the cost for you guys. But I am telling you right now, every person in this webinar and in this webinar alone, if you're not in it and you decide to get it in this webinar, you will get, regardless of whether we have any spots left or not, you're going to get the grid for life. But here's what I need you to do. And I'm going to go through the details here in a second. I need you to type in your phone number with the word me. I cannot tell you that this is going to hold true tomorrow. In fact, I can almost promise you it won't hold true for tomorrow. I can also tell you that I'm probably going to get in trouble because although I haven't talked to the management since my last webinar, I do have access to see how many people have upgraded and who's done this. And I kind of do know, I probably shouldn't have said that, but I kind of do know how many out of that last webinar. So I'm probably going to get in trouble for this, but I'm going to say every person in this room that does decide to go forward with this, now I'm going to give you all the details here in a second, but if you decide to go forward, you decide to get the grid and go through the class and have this, then you tell them, if you type in your phone number with the word me, you tell them, Tyson said, I don't care if there's any seats left or not, Tyson said, if I go into it, I get it for life. And then I will deal with the ramifications if there's ramifications. This might be the last webinar you guys ever hear me on. No, I joke. I'm just kidding. But honestly, I don't know. I don't know. I probably just got myself in really bad trouble. But I'm willing to do it because I want to go to bat for you guys. Because honestly, I'm here for you guys. That's why I'm here. Okay, let's go on. Yeah, so I'm going to give you guys another opportunity to type your numbers in at the end. But here's what I would type your number in with the word me right now because it wouldn't shock me if Jeff doesn't come running around the corner and pounding through my door right now and say, stop saying that, like before the end of the webinar. So I would like be on record before 8:16, 8:17, before he actually comes barging through my door. I'm not kidding you guys. I'm not supposed to say that, but all right, let's keep going. I'm going to go through these other ones fairly quick. All right, EuroCAD. Remember, we're bearish, right? As I'm talking, you can go ahead and remember, you type in your number. It doesn't mean you're automatically committed. I will go through all the details at the end, but at least you'll be on record. You'll be able to hold me accountable and say, hey, no, Tyson said I get it forever if I did decide to go into it. I have been told that the monthly subscription is probably going to be close to, well, the idea is potentially close to $100. So why would you want to pay $100 a month after your first 3 months for something that you could that you can get for the rest of your life and that you should use for the rest of your life? Okay, so here's the deal. Here's the EuroCAD. We're looking for 550 pips on the downside. So what do? Well, let's use the formula, right? Josh's grid formula, high to low, 545 pips. I'm going to take 545 times 3 divided by 2 divided by 10. I'm going to have an 82 pip grid. Look at how easy this makes my life. 82 pip grid. I'm going to sell on both sides of the market. My stop loss is going to be 146. My target is going to be 139.13. Let's double check. Good to go. Good to go. Bam. Done. Look at that. Look at that. Look at how genius this thing is. Now, I gotta make sure everybody's very, very clear on this, okay? I am not changing the style that I trade. These are trades that I would normally take. I would normally take my, any other time. And I would normally take this trade in the pound CAD and I would be looking to make 530 pips. But because I have access to the grid, thank goodness, I'm going to make more. Every single one of these trades in the pound yen, The pound yen has 540 pips worth of expectations. If you set it up with the grid, you should be able to triple that. Your expectation should be more like 1,500 pips just by trading with the grid. In the Euro CAD, I'm expecting 530 pips if I traded it normal. I should be able to triple that trading it with the grid. Aussie CAD, same thing. Now Aussie CAD, I'm a little reluctant on. This one's real. I'm going to go real quick on this though. So very soon we will be able to set alerts or set trigger levels on the grid. And this is awesome. Watch this. Hopefully this makes sense. Okay, so type in a wire yes if you can see why I believe the Aussie CAD's actually moving up, going to move up to 101.85, right? So I believe that. But remember, on the daily, we have to be a seller. And I have to be a seller, and I believe that price isn't going to move above 102.45, and my target on this is going to be down to this 98. But I really don't want to establish the grid until we get to 101.85. I don't want to do that yet. So here's the deal. I can't do this. This isn't part of the grid yet, but in the next update, I'm going to be able to do this. I'm going to be able to say 10 grids, both sides, sell. My stop is going to be at 102.55. My target's going to be at 98.65. And then I'm going to be able to put an activation rule in here. And I'm going to be able to say activate, and I'm going to be able to say at a price of 101.85. So when I hit OK on this right now, it'll automatically activate it. But once the update is established, once I hit update on this, no grid will be established until 101.85 is hit. Type in a wire yes if that makes sense. That's huge. That's brilliant. Because now I can set this trade up. I know exactly the level I want to trade at. I don't want to set the grid up until it hits 101.85, but I also don't want to be in front of have to be glued to my screens. And I don't want to have, be woken up at 3 o'clock in the morning. So what I could do once the update is out, and you guys are going to get access to the update. Everybody that gets the lifetime, you'll get lifetime updates also. When the update comes out, I'll be able to put a activation rule of hit 101.85 first with these parameters before you establish the grid. And then let's just say right now it hits 101.85. Boom. It will establish the grid for me. So because this one's not ready yet, I'm gonna move on to the pound CAD, and I'm gonna go through these kind of quick. So pound CAD, we have an expectation of 350 pips. Well, how in the world can we triple or quadruple that? Well, this is how we're gonna do it. Pound CAD, let's go through the formula. High to low, 600 or 760 pips, 760 times 3 divided by 2 divided by 10, 114 pip grid. I want 10 sides. I want both sides. I want to sell. I want 114 pip grid. My stop is going to be 175.90. My target's going to be 168.71. Double check. Done. Done. You see it? I'm done. I'm done. There's nothing else I need to do. I need to go to bed. I need to go have a beer. I need to go do something else other than sit and watch this because I'm done. All right? Pound New Zealand, last but not least. What do we think's happening in the Pound New Zealand? Well, we believe we're moving down. I'm going to link this over here. I'm going to link this. I believe we're moving down to 75.13. And this trade, again, risk to reward's not great. I get it. And actually, you know what? Let me update this. I believe that you don't have to have a stop all the way up there. I actually believe that this high 2 days ago is going to hold. So this is actually the way that I have it set up. So let me show you. I believe that this high we put in yesterday is going to hold. So that's where I'm willing to place a stop. So I'm going to link that. So that actually makes risk to reward a lot better. So now let's use the formula. From low to high, 700 pips. So 700 times 3 divided by 2 divided by 10. We need a grid of 105 pips. 105 pip grid, both sides. I'm going to sell the market. My stop is going to be 83.46. My target is going to be 75.13. Double check. Done. Done. Guys, We literally just set up my favorite trades, and instead of, so in this trade, we've got 650 pips. So here's your expectations if you're a grid trader. 650 pips in the pound New Zealand. 350 pips in the pound CAD. Aussie CAD we really haven't set up yet, but pip expectations in this is 240 pips in the Aussie CAD, 240 pips there. Euro CAD, 530 pips in the Euro CAD. And last but not least, 540 pips in the pound yen. If you trade them normally, you should be able to, on these 5 trades, 1, 2, 3, 4, 5, you should be looking to make 2,310 trades. Type it a wire yes if you understand that. That's a normal trader. And you know what? I'm going to pat you on the back. I'm going to say, hey, great job. You did awesome. That's great. That feels good. That's awesome. You made 2,310 pips. If all of these trades work out the way that probability says they're going to. Grid traders, your expectation should be about 3 to 4 times that. So your expectation should be, instead of 2,300 pips, should be about 7,000 pips. So you tell me, which one would you rather have? 7,000 pips or 2,300 pips? Taking the same exact trades, just using a different management technique. Yeah, it's a no-brainer, guys. So here's the deal. I got a little behind. I'm going to share these workspaces with everybody, and I'm going to do it in a different way. I'm going to just label them as each individual pair so you guys can kind of track them a little better. Now, I'm going to say this. I believe that what I've just shown tonight is for everybody, and I mean it's for everybody. I think it's almost like a screwdriver is to the carpenter. And because the way I look at this is these are trades that I'm going to take regardless. I'm going to take every trade that I talked about today is a trade that I would normally talk about in a trading session. But the difference is instead of making, 2,000 pips in those 5 trades, I should be able to use the grid and be able to trade in a style where I should be able to make 7,000, 8,000, 9,000 pips in those same trades just by letting the grid and saving myself time. Now, I have to ask this question. I have these 5 trades set up right now. Do I have to do anything else, or is my job done? You tell me, is my job, do I have to spend more time in front of my charts and sit there and stress about, or is my job's done? I'm done. If these are my favorite trades, and these are 5 of my favorite trades, my job is done. I can now, and I think this is so important, so many of you got into this business because you wanted more time, right? You wanted more freedom. But now what you're doing is instead of getting time and freedom, what you're doing is you're finding yourself in front of charts all day, every day, all your free time. You thought you were going to spend more time with your wife or your husband or your kids or your grandkids or whatever it might be, and you really want to and you're going to, but you spend so much time in front of the charts because you feel like you need to, or else you're going to miss something. I think this grid trading is going to allow you to get your life back. And it's not only going to allow you to make more money, but you're going to get your life back too. That's huge. So here's what you're going to get. This is Josh's course. He's the one that's going to teach it. This is his strategy. I love it. I'm super excited about it. This is basically leveling on steroids. Not that I hate to bring in, steroids, but it is. It's leveling on steroids. It is. You're going to get the manual, a checklist. Now, this is a strategy that I believe can be tied to any strategy you have. You should grid trade. I will go as far as to say this. This is probably the most bold thing I could say. Every trade you take should require you to have a direction you're trading in, a level you're trading to, and a stop loss. If every trade has a direction, a level, and a stop loss, then there is no reason to not trade with the grid because you will make more money by taking those trades. What I want you to do is this. Imagine all the trades you're going to take in the next 6 months. Let's say you make 5,000 pips in the next 6 months, just on your normal trades. In grid trading, if you trade with the grid, you should be able to triple that just by trading with the grid and be able to give yourself more time to spend with your friends and your family and do the things you want to do. And that's not a joke. So here's the deal. Here's your expectations. You're going to be able to optimize any strategy. This is a must-have, I believe, for any strategy. Doesn't matter. It pairs with really any strategy. But the 3 core strategies that Josh and I actually 100% agree are mastermind students, leveling students, and target students. In fact, Josh kind of created this around kind of the concept of leveling and mastermind. And now target traders are using the concepts of leveling also. Using the no-brainer method that Josh came up with the formula, it actually has a 90% win rate. Yeah, absolutely. Michael says, what about compass traders? For sure, compass traders are doing great. Compass traders are actually very similar to like wave traders, very similar to the style that I have. Fibonacci traders. You focus a lot on fibs. Compass traders are great. Yes, absolutely. Here's the bonuses. If you are one of the first, I can't even say one of the first 100 because I believe we have the 100 are done. I'm going to find out here real soon when I walk out of this office and get yelled at, but that's okay. So here's what I'm going to give you guys, because nobody told me I can't. So until they tell me I can't, I'm going to keep giving it to you. You're going to get the bonus of the trading sessions. Josh is going to put on every month. He's going to do a 4-hour, he's going to call it fill the gap trading session. And these trading sessions essentially are to set you up with the best swing trades and position trades, and also go over some scalping techniques, and to really kind of make sure that you're filling in the gap, making sure that you're getting everything you can. You would normally get 1 month of this. As a bonus, you're going to get 3 months if you get into it tonight. I can't guarantee you'll get this tomorrow, but tonight I can guarantee if you decide to go into it or type in your number, you'll get this. Here's the one thing that I need everybody, please pay attention to this. This right here, I have a feeling is going to go away after this webinar. I have a feeling I'm probably going to get in trouble because I talked about this. We're supposed to offer this only to the first 100. We had 20 of them, and I had a group of about 225 students 2 hours ago. And I saw how many of those students ended up purchasing this product, and it was pretty close to the number that we had left. And in this room right now, I had at the max, I had about 380 people in this room. So I'm going to just assume, I'm going to play dumb, and I'm going to ask for forgiveness rather than permission, and I'm going to assume that we still have 20 spots available, even though I'm pretty sure we don't. But regardless of whether we do or not, I'll subsidize the cost. I'll figure out what I need to do. I'll make it up. You know, I'll get yelled at, and then I'll figure out how to make it up to the management. But if you decide to go into this, I am telling you right now, you have my word that you will get the lifetime ownership of the grid. You will never have to pay the subscription monthly fee, ever. We are going to be going to a subscription fee to almost everything we do. So my opinion is, if you can get this for life rather than paying a subscription fee, then you better, gosh darn, get it for life. Because it is something that I believe every trade you have on now and every trade you're going to make in the future should be done with the grid. And I'm not kidding you. So if you type your phone number in, if you haven't already, if you type your phone number in right now with the word me, and you go on record, then you will have access to this, because I say it and because I'll figure out a way to cover it. You will have access to this for life if you decide to go into this course. Now, after this webinar, I can't tell you what's going to happen after this, but I can tell you, because I'm in this one and this one's being recorded and I'm going to go on record, you will get this for life if you decide to go in the course because of this webinar. Now, here's what here's how the course breaks down. All of this together, if you were to do all this together, the retail value, the overall value is about $5,500. That's not what you're going to pay. Here's what we're doing, and I do know that we're still doing this. We have an early bird cost savings, and this early bird savings is probably going to maintain for at least a couple days. What's not going to maintain is the lifetime subscription of the grid. But I'm going to guarantee a few things. I'm going to guarantee you're going to get this in this webinar only. You're going to get this $19.95 price. So you're not going to have to pay more than that if you type in your phone number. You're also going to be guaranteed, whether we have the spots or not, doesn't matter. If you type in your number and if you decide to go forward with this, then I am going to guarantee that you will have the grid for life. Even if your education specialist says, well, we don't have any spots available. If they say that, and I'm confident that we probably don't, if they say that, tell them, throw me under the bus. Say, it doesn't matter. I'm going to get it for life if I sign up, because Tyson said it in a webinar that was recorded, and it's on air. And I've got 380 people that were witnesses to it. So it would probably hold up in court. So here's what I'm going to do. I'm going to pause for a second. I'm going to encourage every person, whether you think you can do it right now or whether you're kind of on the fence, that's okay. Go on the record in this webinar right here. type in your phone number with the word me. Have a conversation with your education specialist. That's it. That's all I want you to do, because I can't guarantee tomorrow or the next webinars are going to offer the lifetime ownership of this. I can't guarantee it. In fact, I could probably almost guarantee it won't. But I know today right here, I'm willing to go out on a limb for you guys and offer it in this one. So again, all I want you to do, if you're not in this, type in your number with the word me, have a conversation with your education specialist. Talk to them about getting in the course. Remember, you're going to get the bonus of the trading sessions. And in this webinar, for sure, you're going to get, if you decide to sign up from this webinar because you typed your number in, you will be one of the students that gets the grid for life. You won't have to pay a subscription model for it. Okay? So I want to thank those. Quinn, thank you. I've got your number. Mike, Manuel, Barry. I'm not going to put a number on this because I'm pretty sure we've already gone over the 20, so I'm not going to say, oh, we only have 20 spots because that was 2 hours ago. So I'm just going to say, whoever goes on record and decides to go into it from this webinar, guess what? You're going to get it for $19.95 and you're going to get the lifetime ownership. That's what I'm going to say. So if I were you, I'm going to end with this. I'm going to say, if I were you, even if I were on the fence and I wasn't quite sure, I would type my number in with the word me. I would go on record to say, you know what, I'm not 100% sure, but you know what I'll do? I'll type my number in, because if I do decide to go into it, I want to make sure that I get the lifetime subscribe. I will get the lifetime access, and that I get all the bonuses, and I get it for the $19.95 rather than the retail value of $3,500. So again, Manuel, thank you. Daniel, thank you. Chris, thank you. A Blocker, thank you. I've got your number. Richard, thank you. Sterling. I'm going to keep this open, guys, for like 2 or 3 more minutes. I really encourage every person in here, type your number in, talk with your education specialist, see what we can do. If they tell you we have no more spots left, throw me under the bus. Okay, I'm the bad guy. I'm used to being the bad guy. It's fine. I'll just have to eat a lot of crow and figure out ways to make it up if I just broke a big rule. So anyway, it is what it is. Roy, thank you. Mary, hey, thanks. No problem. Thank you for the class. I will share those workspaces that I just made. I'm going to do it in a different way, guys, real fast. When I share these workspaces, the purpose of my workspaces is education. So what I'm going to do is I'm going to start sharing these as pound yen, as EuroCAD. So what I want you guys to do is this. I want you to, instead of opening up the workspaces right away, do this. Scroll down and look at, like, for example, if I save the pound yen. Oh, Tyson saved the pound yen. And I'm going to do this, pound yen daily. And so what I want you to do is, before you open this up, check out what Tyson has in what I have in my saved workspaces. You see pound yen daily, then go in and do your own analysis to the pound yen on the daily. After you do your own analysis, then open up my workspace and compare it. That's in a way that's going to accelerate your education. You will learn a whole lot with that. And the closer you get to my analysis means the closer you're getting to become a professional trader. All right. Hey, everybody, listen, I'm going to keep this open for a few more minutes. If you haven't yet, type your number in. Talk with your education specialist. Don't pay more for this than you have to. I think everybody in here needs to have this, even myself. All right, everybody. All right, everybody, have a great night. We'll talk to you soon. Thanks.